Hello, everybody, and welcome to the Open eCry market commentary for the week of October 15th. My name is Toby Gennaro from Trade with Precision, and just coming to you with the week's outlook on some of the U.S. indices. We'll possibly look at some foreign currencies and maybe some commodities, just get the direction for the week and see what the markets might be telling us. And here we are on some of the higher time frames, looking at the U.S. indices here, the mini S&P futures, the ES contract. And as we normally do, just taking a look at some of the higher time frames here, trying to look for what the swing move might be for this week. And as we normally do, looking at the monthly chart, we've got really 4 months here of higher highs, higher lows that we've been looking at. We're right in the middle of the month on this latest candle here in October, so we haven't broken out to a new high just yet. It's looking a little bit bearish, but we still have another 15 days for that candle to close out, so it's not going to tell us much at this point. We do have a nice solid level in there right around 1420, which shows up again right here on the weekly chart. And as you can see, we're getting just a little pullback right back into the moving averages, right back into the buy zone amongst the 10 and 20 period. And so at the end of the week, we're going to get a pretty good idea of what the markets might do once we get a closeout of this candle right there. So it's looking fairly bullish right now. As we move down to the daily chart, we can see we had a reversal pattern that we were talking about last week that set up, and that took us down at least back into the low point of that reversal pattern, which is right around 1424. And then we have this backstop right here of around 1420, which we just got to this morning. And so it's looking like, if you look at the 240 and the 120-minute charts, you'll start to see some divergence pretty strong on both the MACD and the RSI, telling us that the trend here on the downside is weakening a bit. So we might get a bounce here in the early part of the week, back up possibly into the midpoint of this downward move, and then we might see potentially a rollover to complete this reversal pattern. Usually when you're looking at these reversal patterns like this, the high was right around 1467. The low was right around, say 1426. So it's roughly about 40 points. And usually it's going to kind of mirror that to the downside. So 40 points to the downside puts us right into this level, right around 1386, 1385, which would be a good place to begin getting long the market again. So we'll just have to see what happens here. This could be a consolidation sideways. It may not break down that far. It could move back up to the top side and start putting in a flat level up around that 1466 level. And so we don't want to be jumping into the markets too soon here. We want to make sure that we get a proper setup. But for right now, we can look at some of the intermediate time frames and start to pick up some of those divergence plays on the intermediate time frames to look to at least play this back up to the long side for the short term. And then once we get back into a 50% retracement of this move, then we can start to look for to see what the markets might do. If it's going to push higher, then we're probably going to get back up to this level. If it starts to roll over at that level, more than likely we're going to put in another lower low, which again might take us down to that 1386 level. So that's kind of what the markets are looking like. Daily chart pretty revealing there, and then take a look at the 240 and the 120-minute charts to get some direction on some of those shorter term moves. And taking a look at the Russell small cap stocks here on the TF contract. In a little different scenario here than what we've been looking at on the ES futures. We have basically a flat level that's setting up here with a third touch. And so we just put in a higher low right there at around that 730 level, moved back up into that 860 level again, got a nice rejection candle off of that. So it looks like we might be pulling back possibly into that 778 level, maybe the 800 level. Just we'll have to look at some of the other charts to see how far that pullback might happen, but it could be a deeper pullback and we could still get a move back up into that 860 level for the fourth touch, and then start to look for that flat level break of that 860 level. But again, this is a monthly chart. That could take a long time, so we just want to get kind of a big picture of what the markets might be doing. As we move down into the smaller, lower time frames, we can start to get a better idea of where some trade setups might be more short term. So even on the weekly chart, we can see solid resistance level right there at 850. Got a break of that, and then a pullback right back down in the moving averages. So on this candle, we still have till the end of the week to get the close of that candle. Could be bullish, could be bearish. We don't know just yet. But as we move down to the daily chart, we can see a couple of things. One, we don't have a reversal pattern on the small cap stocks like we did on the big caps on the S&P. So what we do have, though, is a change of trend. As you can see, we have a move down to a lower low, down below this low of around 830. Then we had a move up put in a lower high, and then we just put in a lower low toward the toward the end of last week. So we now have a change in trend on the daily chart, and I have a Fibonacci retracement put in here, and just from that most recent low of around 760 up to the most recent high of around 866, 867. The 50% retracement puts us right in around that 812 level, somewhere between 800 and 812. And so we're pretty close to that right now, got down to 815. I would anticipate that we're going to probably go a little lower here, but at some point there's going to be some buy orders accumulating around this level because we have this solid support level right around in here at 820. There's some congestion there. We also have a very nice support level down around here at 800. So somewhere around 812 to 800 is going to be, there are going to be some buyers accumulating there. We're going to get a nice bounce. It might be a 50% retracement of the most recent down move. So we're just going to have to see how that works out. One of the keys or clues that's going to help us on some of the lower time frames, right here we're looking at the 480, which doesn't really tell us a whole lot. We don't have any divergence on the indicators just yet on the 480 with this lower low right here. But as you go down to the 240, the 120, the 60, you'll start to see a lot of divergence on both the indicators here with this most recent lower low, which is telling us that this downtrend here is starting to weaken, and there's potentially going to be a bounce. And so when we see these bounces, we want to start looking at the 50%, 62% retracements of the most recent move, and then also draw in some Fibonacci's from the top to the bottom and look at the larger move and potentially a 50% retracement. So we'll have to see, and then pay attention what happens around those 50% retracements. If you get rollovers at those levels, then potentially that means that we're going to come down and probably break down to a new low or put in some kind of a reversal pattern at the bottom. So keep an eye out for some of that, but it looks like short term, the beginning of the week, we should be getting possibly a bounce, some kind of a retracement back into some of these levels. It might be a 50% retracement of the daily chart because the divergence is showing up on some higher time frames like the 240 and the 120. So keep an eye out on those charts and take a look for for some of those flat levels moving back to the upside. And again, these are just going to be short-term moves. We're not looking necessarily to hold all the way back up to 865 until we get a sense that we've actually come back, we've done a 50% retracement, or we've done a 62% retracement, and now we're really moving off of a nice solid support level, looking to move back up into the 860 range. Okay, so we're still overall bullish on the U.S. indices. It's just a matter of picking our spots on the pullback and deciding when to get long on a valid trade setup. And we looked at silver a little while back, just within the last week or two, and we identified just the strong uptrend here, but we have been pulling back on the monthly chart for quite some time, and really just kind of pulling back into the moving averages. We did put in a lower high and a lower low on the monthly chart, which can be pretty strong. And then looking at the weekly chart, we can see that the weekly chart has certainly rolled over. We're still getting some bounces back up to the long side, but as you can see on the daily chart, we're looking at from, I believe it was last week or the week before, but there was a flat level setting up right here, potentially looking to push higher, but we got a rejection candle right in there that just kind of punched through the high and then rejected down off of that. So as you recall, in the last video I did on this, we were looking at the break of the low of this candle, and then to take the break to the short side. So if you look at the width of this consolidation right up around say 35.4, and the low of that consolidation is say 33.4. So basically a 2-point consolidation means if we break this, the low of this, which we did, we'd be looking to move down probably another 2 points below this 33.4 level, which would put us down into right around probably 31.4. And so if we start to look at the Fibonacci retracement of this whole move right here, I've got this on the weekly chart, this most recent low to high, the pullback would be right into around that, say, the 35 level. So pretty close. If we make it down, back down to 31.4, more than likely we could get back to that 50% retracement. And then there's some congestion there. Not a great support level. Probably a better support level down around that 29 level, but not sure we're going to get down that far. So that's what I'd be looking for, is to play some of those Fibonacci retracements along with all that support and resistance and all that congestion, and look for a healthy pullback and then potentially at least a move, back up to the top of that level. Remember again that when we're not looking at a solid trend here. I mean, we have a good uptrend on the monthly chart. The weekly chart, everything is mixed up in terms of the moving averages. But as you look at some of these lower time frames, things still look good on the daily chart. And then as you get down into some of the intermediate time frames, you can see that the momentum is clearly down. And then we can either look for a pullback back up into this level at 33.5 if we get that, and you can get another short that'll be right back into the moving averages and get another short back down off of that and back down into that 31.4 level. So that's kind of what I'd be looking for in terms of a short on silver. And then once we get back down into that 50-62% range, then we could probably start looking for a long setup to get back on the long side of this trend overall with some of the higher time frames. And just taking a look here at one more market, the pound dollar, and looking at the monthly chart, we can see a range we've been in for the last quite a few months actually. The top of that range has been about 163, the bottom of that range around 153. And if we go over to the weekly chart, we can see that we just put in a higher low right there at the bottom, right around that 152.7 range. And then we just put in a higher high just barely above that 163, and then we got to pull back off of that. So we are getting the moving averages into alignment just really at the early beginning of that. So we don't have any kind of a long trend. This is obviously a ranging market right here on the weekly chart. But if we go down and look at the daily chart, we can find some tradable opportunities here from a lower time frame. And as you can see, we've got a lot of small candles here, a lot of predictable price action, a lot of buying pressure moving in an upward trend. We've got the moving averages fanning out really nicely. And we topped out right there at that level of 163 and got a nice pullback right back into the 62% retracement level, right around that 159 level. So we have a couple of had a nice indecisive candle there, and several nice bullish candles there trending up with higher highs, higher lows, right back up into the moving averages. So I'd be looking for a setup going back along again, back up into this 163 level. So whether we start to get a consolidation out of this downward move, start to look for a flat level setup that could push us higher, and then start to look at your lower time frames, and you'll start to see these moving averages beginning to potentially roll up into that flat level, and then look down around the 120, the 60, even maybe the 30-minute time frames to find some an earlier entry to look to see if you can get long back up into this 63 level. So we basically just there was an entry down here at that 159 at that 62% retracement level. So now we're just we missed that. So now we're just trying to find another safe place to join a potential trend that's going to move back up into this 163 level. And that's really how we'll do it. We want to see maybe a consolidation out of this downward trend. We might get potentially a reversal pattern setting up, another retest of that 159 level, and then we'll start to see some divergence setting up on some of the other time frames. So we can look for a number of different things, but the main idea here is a pullback to the 62% level, and then a move back up at least to the 163 level. And we're looking for that move. We're just looking for a setup then to get long to go that direction. Okay, so that's really what we're looking for on the pound dollar. So take a look at some of the time frames lower than the 480 to see if you can identify some of those setups that might occur during the week. And so we're really taking advantage of the dollar looking like it's going to continue lower, which should push then this pairing higher. And that's the outlook for the week on some of these particular markets. We do thank you for watching the Open ECry market commentary, and we do look forward to speaking to you next week on the market update.